Hi everyone, welcome back to my channel. In today's video, we are going to learn what is accounting and some basic terms in accounting. This video is for IGCSE accounting students and AS level accounting students, means who are not taken accounting subject in IGCSE class. So we can start. Accounting, account, accountant. Three terms. Accounting means the process of entering business transactions in the books. That is called accounting. Simply, that is called accounting. Next, account. Account means the book where business is entering all the transaction. That book or file is called account. Accountant, the person who are doing accounting work or who are entering the transaction in the books of account, he is called accountant. So, now you want to know what is transactions, right? Yes. Transactions means exchanging of goods and services or giving and taking. So, we can check some transactions. Capital. Capital means the money or items invested by the owner into the business. It is called capital. Next, assets. Assets means all the properties of the business is called assets. For example, furniture, computer, equipment, machinery, land and building. These type of cash, bank, these all are the assets of the business. Next, liabilities. All the liabilities what the business is owing to outside, that is called liabilities. For example, business has purchased the goods but they are not paid to their supplier. That is the liability of the business to the supplier. Then loan, bank loan. Business has taken money from the bank and they are using. That money business has to return to the bank with interest. So we can call bank loan is a liability. Next, purchase. Purchase means purchasing of goods. Business always entering purchase means when business is purchasing the goods or services for resale. When the business is purchasing goods for resale, that is called purchase in accounting. Sales means when the business is selling goods, that is called sales. Stock. Stock means what business is purchasing and keeping, that is called stock. There are different types of stock in a business. Stock of the goods or stock of raw material and stock of work in progress, etc. So what the business is keeping as a goods or materials are called stock. Expense. All the expense what the business has paid, that is called expenses. Incomes, what the business has received as income, that all are called incomes. And other transaction, there are many other business transactions also. So the first one, in the transaction, business prepared the first book is called journal or books of prime entry. All the transaction immediately accountant will enter in the books. That books are called books of prime entry or journal. When the business bring cash or invest money in the bank, they purchase or sell furniture, machinery, different types of asset or different types of liabilities, purchase and sales, and different types of expenses like salary, electricity, tax, rent, etc. Different types of incomes. Whatever the business transaction, immediately accountant will enter in the first book, that is called journal or books of prime entry. Next, ledger. Ledger means all the transaction which we entered in the journal, we will transfer into the ledger. This process is called posting. Journal, all the transaction immediately entering. Ledger means they are classifying the transaction into ledger. with the same type of transaction. For example, all cash transaction goes to cash ledger or cash account. All the furniture transaction, the transaction of furniture like purchase or selling of furniture. Then building transaction goes to building. Purchase of goods and services, sales of goods and services, payment of salary, rent and different types of expenses. All the salary payment or all the salary details goes to salary account. Rent details goes to rent account. All the stock type transaction goes to stock. All the electricity goes to electricity. There are different types of ledger in a business. So each ledger is entering the transaction related to that ledger only. For example, rent, the ledger rent account, entering only the transaction about the rent, paying of rent or due rent. Everything related to rent goes to rent account. Next, trial balance. Trial balance is not an account, it is a statement. It is only just one sheet. All the balance of the ledger, we already prepared the ledger. This whole ledger, once we prepared, we balance it, make the total of that ledger. This goes to the one sheet that is called trial balance. So trial balance is the summary of all the accounts we can check in trial balance. Next, final account. Business prepared, journal, ledger, trial balance. The next process is business prepare the major accounts, that is called final account. Final account means the end product of accounting, that we can divide into two. One is profit and loss account, one is balance sheet. Profit and loss account, it is an account. We prepare the account to calculate the profit or loss of the business. Here we enter all the incomes and expense of the business. Income minus expense is called profit. If the expense is more than income, we can call loss. So it shows what is the final profit or loss of the business at the end of the year. Next, business prepare the balance sheet. In the profit and loss account, business enter only income and expense to calculate the business profit or loss, while balance sheet shows assets and liabilities plus capital. It shows the financial position or financial condition of the business. That's why this is called statement of financial position. It shows all the assets, liabilities and what is the total capital invested by the owner to the business. So it gives the information about the financial condition of the business, while profit and loss account gives the business result, profit or loss of the business. Next, finally, business do the comparison. They enter the transaction journal, ledger, trial balance. Finally, they calculated the profit or loss of the business and financial position of the business of the year. Then the business will check. They will do the comparison. They will check the business result. Business is growing or business result is improved or decreased. So business, how they will do the comparison? They will do with the result of the previous year or the same type of the business in the industry. For example, if we are preparing the business calculation of 2021 business result, business can compare this result with the previous year like 2020 or 2019. So they can analyze business result is improved or no, and what are the reasons the business result improved, how was their incomes and expenditure and everything. They will do the analyzing step by step. Or they can do this analyzing or the comparison and analyzing by doing, for example, our business is ABC. There are the business XYZ and PQR. They are doing the same business, what type of product and we are selling. So they can check the result with our result with their result. So the business can compare their business is improving their result or no. This is called comparison. These are the 5 steps include the accounting process. So now you learned what is accounting. Accounting is the 5 steps included. The first one, they recorded all the transaction immediately in the first book, that is called journal. Then they are classified these transactions into different books. That book is called ledger, different accounts. Then once the business prepared the ledger, they will balance the ledger. Each ledger account they will calculate the balance. Then they will put this balance in one sheet. It is called summarizing. That statement is called trial balance. Trial balance shows the summary of all the ledger account balance. Then business will analyze how the business is going this year. They will preparing the final account by calculating the profit or loss of the business and financial position, how much assets and liabilities in the business. Finally, business will do the interpreting or comparison of the business result with the previous year or the same type of business. So, now we can check what is accounting. Accounting is the art of recording, classifying, summarizing, analyzing and interpreting of financial transaction. It's very easy, right? One by one the step, just you have to check what are the steps included. Then you can easily write the accounting definition. Hope all are enjoyed today's class and you understood what is accounting. You understood simply what is accounting, each step one by one. If you didn't subscribe my channel, please subscribe and share with your friends. Thanks for watching.